Linda Rotenberg, the co-founder and CEO of Endeavor, and this is our fourth installment of Endeavor Presents Leading Through Crisis. And I'm thrilled today we have a good friend, Kevin Ryan, a serial founder, entrepreneur, investor in some of the most iconic companies of the last 2 decades, from DoubleClick to Gilt to Business Insider to MongoDB to a number of others. And welcome, Kevin.
Happy to be here. This is it's exciting to be able to do this virtually for the entire world.
Although it's a little sad, you know, the last time we saw each other was actually in Riyadh.
Yes.
At the wonderful Endeavor selection panel. I thought we were going to have many New York dinners and future ISPs. Now here we are on Zoom. It's not a terrible second choice, but it's more fun to see you in person.
Yeah, not as good as the first choice. I agree.
So why don't we start out with you sharing your story for those who don't know. And I have to say, I thought I knew a lot about you. I didn't know the Dilbert website.
Yes.
That was new to me. So anyway, tell everyone, share your story up front.
Yeah, no, that changed my career actually. So going that far back, I was working for a media company in 1994, 95, and I started a website at the time, the Dilbert website, which became very, very successful at that time. And so I went to the parent company and I said, this internet thing is going to be very big someday. And I think we had a head start. We had advertising, we had e-commerce. You should give us millions of dollars and I'll build up an internet division. I was just thinking as a good, loyal corporate citizen. And so they took a long time and then said no, because they said to me in a line that does not stand the test of time, they said, this internet thing could be a fad. And I was like, I don't know about that. And so I think I'll just go out on my own. That became DoubleClick. 96, DoubleClick started. And then 4 years later, we had 2,000 employees in 25 countries. So crazy, crazy 4 years. We even went public in the middle. In the good old days, you could go public 24 months after the company started. So we did that as well as one project, 15 acquisitions. Then the market collapsed. I dealt with that for 5 years. We came back. Eventually, the company was sold to Google for about $3 billion. And then post DoubleClick, I started a lot of different companies. And in the first couple of years, started Mongo, Business Insider, and Gilt. All my companies started in New York and started building from there. And so I really, since then, I've been mostly building from scratch, but also investing in early stage companies.
Including Voila and Blue Ground, two Endeavor entrepreneurs. It's funny, you mentioned that this internet thing, it might be a fad. One of my favorite stories of early days at Endeavor, it was like 1999 or 2000 in Brazil. And the Mourinho family is one of the top business families in the country. And Roberto Mourinho, now deceased, calls in his 2 sons and says, this internet thing, you've heard of it? And they said, yeah. He says, figure out how to buy it. That's what we deal with in emerging markets. Figure out how to buy the internet.
It was a good instinct. It was a good instinct.
Yeah. Okay. So let's start with, you mentioned DoubleClick, which has a great, ending story. But I love, you mentioned in one interview you gave that you lost 70% of your clients. Now you lost 80% of your competitors, so that was okay. But you had to go through multiple rounds of layoffs. Here we are. That was the dot-com crisis. We're going through another crisis today. Talk about that moment and how you handled it as a leader.
Yeah. No, it was super ugly, and it was actually worse than this period here because everything was so much smaller. So money just dried up in a way that still hasn't completely dried up. It dried up, but dried up for 2 years. It's a long time. And we did round after round after round of layoff, and the sector went down. I mean, the average went down by 80, 85%. And so that's just, you can't imagine Amazon shares being at 2,400 today and, going down to 240. And so that's what happened to all of us. My stock price was 130 at the peak and it went down to 5. And so that's pretty bad. And, everyone gives up, no one has hope. And what was interesting is the underlying fundamentals of our business were still always great. So the number of ads we were serving, the advertising out there was kept growing through this entire area. So that's the one thing that gave me confidence that what we were doing was not going away. This was a financial crisis, not a fundamental business crisis. And so the one thing I did wrong is I did one round of layoffs and I told everyone, look, I want you guys to know we're done. This is it. And we did think that was it. And we were just completely wrong. It just kept going and going and going. And so by the time I announced the 7th round of layoffs,
wow,
people are cynical and they're like, he has no idea what he's doing. He didn't see this coming, which is true. And I don't know what's going to happen. People stayed sometimes, even though they hated their job, but they couldn't get another job and they stayed around. And also you deal with things, every decision you make in the 12 months before the crash is a disaster. I bought a company for 200 million that then was later worth 20 million. So you look like an idiot. I signed a lease that looked terrible. I convinced someone I knew very well to quit their high-paying job at Time Warner and join our company, take a 60% pay cut, and then we fired him 6 months later, and I knew he wouldn't be able to get a job. And you don't feel good about that.
No. So how do you handle that? And it's interesting because the last conversation we had here was with Marcos Galperin, one of the Endeavor entrepreneurs who's built Mercado Libre into this iconic $38 billion company. Yeah. And when asking him about going through several crises, including this one, what his feedback was is he said, do one round of layoffs, not death by 1,000 cuts. But sometimes you can't tell. You don't have the information. This is the scary thing about this crisis is that we don't know if it's going to come in waves. But looking back, what would you tell the then, Kevin CEO, how could you have handled it differently? Or what would you do today as a CEO facing such uncertain times?
Yeah, I would have done 80% of the same. In the beginning, we had no idea how long it was going to last. So there's no reason to cut 50% of your people one day. But I would have just not said to people, this is it. I would have said, look, I don't know when this is going to end. I'll tell you what I know right now. And I tell our companies right now, I have no idea when we're going back to work. I read the paper like you do. I don't know more about the coronavirus than you do, really. We're going to take this 3 months at a time and adapt. And if we do layoffs, I want to remind everyone here, we're doing that in the same way that a surgeon sometimes says, I'm going to have to cut off your arm so you live. And I don't like cutting off your arm, but it is the right thing to do in that particular situation so that I can save the body. And so you've got to make the decision then. It's, you can't feel bad about decisions you made last year. This is no different than in sports. Sometimes 5 minutes left in the game and you're way ahead. Sometimes you're way behind. And you can't spend time saying, let's figure out what happened in the first quarter. Like, this is how we need to get back into the game. This is where the play we're going to run. We're going to not analyze it right now. We're going to just do it. And, it's easy to second guess everyone.
Right. So apart from, I loved your idea of your thoughts on being transparent and not making declarative statements that you then have to walk back from. But how else do you motivate the team that's left behind? This has come up a lot and it's in the questions here as well.
So I think the one thing I did well there is, you need as CEO to come across to your organization as fundamentally optimistic about the future at all times. And I remember one person said, when I wasn't there, like, does Kevin realize, how bad things are right now? Because he still seems to think that we're going to build a very successful company here. And because they really look to you, they think you know more than everyone else. And so even if you come in the office in the morning and look kind of down just because you didn't sleep well, people are like, oh shit, we're in trouble. This is bad. It's terrible. You've got to, say, look, I know this quarter is going to be bad and we miss the people we let go, but get people back to the overall mission. Fundamentally, what is happening is going to benefit us. Our market share is going to go up over the next 2-3 years. And whatever we do as a product, whether it's making bread or, serving internet ads, it's not going away. If you guys think it's going away, you should go work for another company. I do not think it's going away. We are building the greatest company in a huge sector, and we're going to have bigger market share.
I love that. And I know that entrepreneurs are by nature optimistic and problem solvers, right? And what's been so interesting hearing from so many Endeavor entrepreneurs who do believe in the future and who are also pivoting their companies to help solve the current crisis, whether it's helping with PPE or helping, launch telehealth or whatever they can do, but they fundamentally have to also be optimistic, believe in the future. So I love that. So Kevin, Michael Liani of Property Finder in the UAE has a question about your multiple hats that you often end up, as the chairman, the CEO, or your shareholder. How do you, as the company scales, do you believe that that's a good idea for CEOs to stay as chairman? And also, as a follow-on, you also have transitioned CEOs and yourself. And so I'd love you to talk about when you start in one role and when's the time to segue in or out of them.
Yeah, well, so first of all, I am almost never CEO anymore. And you can't be CEO of multiple companies, or in my definition, you're not really CEO. The CEO has to be working, 50 hours a week on that company. He could be chairman of one other company, board member of one other company or things, but you can't do that. So in the last 10 years, I've not, occasionally I will step in if we're changing a CEO, and I will fill in for a couple months while we're searching for a new CEO, but that's the only way I'll become CEO. I can be chairman of a lot of different companies, especially if they're almost all in New York. So I can be chairman of 8 companies or 10 companies. That's doable. But I play a similar role there. I need great CEOs, and that's a big part of the job as chairman, is making sure you have that.
And so to answer Michael's question, do you think, at what point do you think you should bring, if you are chairman and CEO, do you need another voice? What point is it good to have a separate chairman? You may not have a choice, your investors may declare that.
Normally it's declared otherwise. I don't think look, the truth is that the chairman role for any company, even a public company, is not really all that defined. I mean, you are one of the board members. You generally don't have any legal rights as chairman that don't exist for other people. It's more that you're the general organizer, you kick off the meeting. But, when I was chairman of Mongo, which was public, up until a year ago, and I have one vote like anyone else. I may chair a committee, but that's not any official voting status. So if I were CEO of a company and I had founded it, I wouldn't necessarily feel the need to have a different chairman, but I do want to have great board members who are there to give me advice. Whether or not they're chairman doesn't matter.
Rodrigo of Passe Directo in Brazil has this question that many entrepreneurs start companies, but very few exit multiple companies successfully. So he wants to know your sort of secret sauce or key tips.
Well, look, there's no secret success to exiting. I never think about exiting. I just think about, how do I build up a valuable company? Valuable company has a lot of revenue and eventually is going to have a lot of profits. And then you have many choices. You can not exit, take dividends. You can sell the company. People will buy companies like that, or you can take it public. So I really focus more on that. But you also want to be thinking, at some point you do need an exit for everyone. And 10 years in, your employees are going to need something in some form. And so I do think about that long term. But that doesn't even come up in the first 5 years. The key
is there a time when you, sorry, go ahead.
No, go ahead.
No, I was just going to ask, thinking about the guilt story, the one story that maybe didn't end as planned. Is there a time when do you think you waited too long? I mean, there was a moment when every single person, at least in New York, but around the world, was on their computer waiting for that noon New York time to be on guilt, and everyone was talking about it. And then it felt like maybe the moment passed as the industry economics changed. So walk through that and just timing on that side.
So, actually the answer is I didn't wait too long, because I tried to sell the company much earlier. And so I had Goldman Sachs go out, not formally, but just said to them, look, we're open. I was like the equivalent of, I'm at the bar and I'm available, I'm here, and tell everyone I'm here. And so the problem was we were so expensive that it'd be very hard to get a deal done. When we had raised money at $1 billion valuation, you can't turn around to your investors and sell it for, 700 million. And no one out there, and the buyers would have been really retailers. No one was willing to pay $1.2 billion. And so I tried to get that done quietly, which didn't get into the press. And then when we did sell the company, it was really me driving it. And it was a hard process, because it meant that our existing investors were going to lose money. And, in the beginning, we thought maybe it'll be worth 400 million. And so you think, wow, that's not great. But I felt like it was, whatever it was going to be worth, it was going down. That the fundamentals that had nothing to do with us were going against us. And so we ended up getting a bid at, we approached 62 buyers and had a bid at one bid at 250 million. And so our board was like, I don't know. And luckily we did it. And by the way, Saks, who bought the company, sold that company 3 years later for $5 million.
Wow.
So it was the right thing to do.
Timing is in the eye of the beholder.
Yeah.
So actually, Adolfo Babat wants of a clip in Mexico wants to know what actually a chairman does. Now he's saying this actually as a chairman. I thought he was saying it with with outside chairman. So what does a good chairman do, whether you're CEO or whether you're an outside board member?
Yeah, I think normally when you're not the CEO, a good chairman is someone who is the CEO's manager, because one of the ultimate decisions for any board is, do we have the right CEO? So you got to think about that. The second is advising and helping the CEO be successful, because you obviously don't want to replace someone unless you really need to, but you want to bring your advice as a board and use the skills of the people there to help the CEO and the management team be more effective. Each one of us probably brings certain relationships, so we could help the company in some way. And you want to be thinking, the one thing you can't do as CEO is have distance from your own stuff. You're in the forest. And so hopefully that chairman is getting out once in a while and is more objective and can say, I think our head of sales just keeps missing it. And I've been in this position as CEO where I'm like, no, he's great. I hired him, he's great. And after a while, I'm like, you know what? My chairman is right. He saw it first. And now I'm going to make that move, and he got there well. So it's all about advising and helping.
Yeah, Endeavor, we're a lot about mentorship, right?
Mm-hmm.
And one of my first memories of you, Kevin, was, I think it was 2007 or 2008, and Endeavor was sort of scaling. It was going to be 25 countries by 2015 was what Edgar Bronfman Jr., my chairman, declared. And I was like, Jesus, I need help. And I tried to hire a COO, and I thought, okay, we're an entrepreneurial organization. I need someone with corporate experience.
Mm-hmm.
And brought on this seemingly great guy, Disney, Nike. I was so proud. And our managing directors, we're a very decentralized organization, said to me, no way, the guy's too corporate. If you want him to take care of people in New York, that's fine, but don't send him down here, and we're going to end run him and go to you anyway. And I thought, oh, gee, God, that's not going to work. So I had to let him go. And I came to you for advice on the new COO, and you said, all right, Linda, but first I have to tell you that the rap on you is that you're a control freak and you're never going to hire anyone. I was like, wow, thanks for the tough love. But in fact, you know what? It actually, I wanted to prove you wrong. No, but it made me think about that I was looking in the wrong place. And we ended up internally having for 10 years, one of our own, Fernando Fabre, who had been head of Mexico, and then now Adrian Garcia Oraños from Spain. Although in fairness to you and not to me, Fair and now Adrian or Adrian became president because, as Fair said, I'm not taking that failed COO title. So you were right. But talk about talent and talk about, leaders in your own blind spots, as I clearly had and you pointed out.
No, but all of us, hiring is never a precise process. No one gets it right all the time. But it's the most important thing we do. And once you've done it well, we all see it, then you all of a sudden don't have to do anything because you have the CTO who's making all the decisions in his area, and it's a staggering success, or whatever area it is. So, in general, by the way, on that point, the one bias I would have, if you said, do people have male, female, or do they have this sales experience or this? None of those matter. Degrees don't matter. The one group I don't hire from is really large companies. So, because I find it's not that they're terrible people. It's that if you told me, look, I'm going to bring in a marathon runner because he can obviously run sprints, right? And all of us would say, well, actually, no, it's not. It sounds like it's very similar, but they can't sprint. It's a completely different type of muscle structure, and no one who marathons does sprints. And actually, I think it's somewhat parallel to if you've been running a big company, your instincts are just wrong. I don't think I'd have the right instincts to go run 5,000 people at Intel or something. My reactions would be wrong. and their reactions coming in are often wrong and take too long. So I want someone who's worked in a smaller company. You know, he maybe started off, he or she may have started off in a bigger company, but they've been trained in smaller companies. And then the final thing you and I have talked about is just reference checks are just everything. And so people do not spend enough time on reference checks. They will spend 20 hours interviewing various candidates and spend 1 hour on reference checks. And I think most people would be better off if they never met the candidate. That's a bold decision.
If they only heard about the strengths and weaknesses from the outside people. Interesting.
Yeah.
Wow.
There's so many things.
Try that.
There's so many things that you are thrown off by meeting someone and think, oh my God, they present well, confidence, all these things. But what matters in the job is attention to detail. How do they interact with other people? And none of that comes across truly in the interview. I mean, it's a little bit, the interview is like talking to LeBron James about basketball, which is fine. But watching LeBron James play basketball tells me whether he's a good player. Now, I can't watch you in a corporate environment, but all of your coworkers did. And once I hear what they have to say, I'm going to get a full picture of who you are.
Well, what's especially interesting about what you're saying is I've had so many people say, how in this new world are we going to hire people? Because it's not the same over Zoom, right? You can say, and you're saying, actually, it doesn't even matter, Zoom or not, in person, because in fact, it's their prior experience from people. So interesting. Okay, so let's pivot to the investing side, since you are also an investor. So for starters, I'm curious where you come out. I've said this is like a tale of two cities, where entrepreneurs are seeing the future and the opportunities and the digital transformation, and all of the investors are like, cut costs, cut people, and we're pulling back and not investing again. Where do you come out? Are you investing in new companies now? I know you actually just bought Meetup, so I'd love your thoughts on where you come out in terms of whether it's a good time to invest now or whether you're holding your cash.
Yeah, so during the first 6 months of this year, I'm investing more than I've ever invested, almost double what I normally invest, because I am seeing incredible opportunities that are out there, and prices are down. And most people, VCs are lying. They're saying they're investing, but they're actually not investing. It'll get better, but they've been, thinking about their own companies, not willing to take risk. And so that will start to change, but it hasn't changed that much. I mean, they're very, very cautious. I see it every single time. So fundamentally, I'll give you a good example with like Zola. I was reminding them because Zola is a wedding registry. And so all the weddings this month, most of them are being canceled. They're being postponed. So the short-term revenue is down 50%, which is bad. But what is really happening fundamentally is our competitors, who are Bloomingdale's and Target and all the department stores, are devastated. And so our market share is going to go up, I think, more in the next year than it's ever gone up, because we still have 50 engineers working on great features, and we haven't let any of them go. And Bloomingdale's is just trying to stay alive, and got rid of everyone. It's a total disaster. No one would join that company right now. So it is fantastic for our market share, and that's true of many, many online companies.
I always say that chaos is I always say that chaos is the friend of the entrepreneur, because entrepreneurs, to your point, can be agile when all the bigger companies are retrenching, right? And we also know that half the Fortune 500 companies today were founded in periods of downturn or crisis. So when you look 5 or 10 years from now, many of the greatest companies are going to be those founded or who pivoted today. And yet people get nervous. So if you're in a situation where you're in the middle of raising the Series B or Series C, and suddenly investors but you have a great business opportunity, what do? How do you either make the case, you have to double down on your storytelling, or do you take a convertible note or a bridge round? Like what advice do you give for entrepreneurs who are just kind of stuck in the moment where the investors are not really willing to listen?
So look, if it's right now, they're almost always going to have to do an internal round. So I've spent a good part of the last 6 weeks organizing internal rounds for the 4 companies of mine that we're going to need to raise money in the next 6 months. And so often the valuation has come down. As we say, the flat round is the new up round. So, but the market price is the market price. And so you want to raise as little money as you can still do what you need to do and get to some point next year. I think you're going to be in a better place, first, second quarter next year than you are right now. And so we just got to get there. Look, some of this is survival. I mean, you need money, and your number one responsibility as a CEO is don't run out of money. And there are times when there's just no money. And right now is a time where there's some money, but there's less money. It's hard to get new investors in. So I have companies that are making compromises and lower valuations and slightly worse terms. But as long as they're only raising 10% dilution or something, not the end of the world. It's fine. And you're going to live to fight another day. What is going to happen is that the weaker companies are going to get culled from the herd. And that probably would have happened anyway. But, if we're already showing poor numbers and, need to raise money in the next 4 months, you're not going to be able to raise money. And the truth is that would have happened at some point. It's just going to happen faster.
Well, and the same is true with the fly-by-night investors, right? I think that the people who thought it was easy because everyone was making money and SoftBank and everyone was, doing these huge valuations for the later rounds, they probably were not going to stand the test of time either. And we've seen that over time at Endeavor. I actually, weirdly, this is like our DNA at Endeavor. We started with the Thai baht crisis. We went into Greece after the financial crisis. Like, these are the moments where we show up and we actually feel better because it's the real players. To your point, it's the real entrepreneurs, it's the real investors. But you have made some investments, and some are in healthcare, the meetup. So talk about some of the things that are exciting you at this moment.
Yeah, but I'm not really investing in things that are directly Corona related, because when I do either start from scratch or such early stage generally, that the company I'm getting involved with is not going to be big for 4 to 5 years. And so 4 to 5 years from now, I'm assuming that we're out of this and we're back to whatever the normal is. And we can debate what that's going to be. But I'm not trying to, figure out what's going to happen in the next 6 months. There'll be some fundamental trends that have been accelerated, but it's not changing my thought process. So my thought process is more just bottoms up. There are still opportunities in every single sector that are interesting. And so definitely doing a couple in healthcare. It's starting both from scratch and early stage companies. We just invested in a company that has a better way of treating autism, which is an unresolved issue. So in healthcare, we're looking at that. We're spending a lot of time right now, have not pulled the trigger yet on looking at a fascinating area, which is meth addiction. So there is no solution right now. It's the number one, you probably think opioids is the biggest drug problem, and that's true in the East Coast, but in the West Coast, it's not. It's all meth. There are 30 states where that is the number one problem. And so we're coming up with ideas to address that because it's an unsolved problem. We're seeing, we're just investing right now, just invested last week in a company called ClassTag, which has software that helps you as a parent be in touch with your teacher, or the teacher be in touch with all the parents, some by texting, some by emailing. That whole process becomes the operating system for the school. So Corona has accelerated, obviously, what they're doing, but it was growing before.
I'll tell you, that is an area that needs help, because I've spoken to so many parents, and I love actually Zoom for Endeavor's purposes. We transferred our international selection panels online. It's working, the magic. Zoom schools is not working. Google Classroom schools, not good. I mean, the kids are just zoning out, so passive. So someone needs to fix this. So I hope you can figure out a solution, because we need one. Yeah.
And then we just did an internal round for Zola, and then I did something unusual, which is to buy the company Meetup. It was a company that sold for $160 million 2 years ago, and I bought it for about 1/10 of that because WeWork needed to sell it, and no one else was at the table. So I think by the way, they're having record revenues this month in their 18-year history, which probably wouldn't have expected, and record profits.
That's interesting. Now that's interesting, because it's like a social network, but it's designed to kind of bring human interactions closer. Yes. So what are some of the learnings, as all of us have transferred our teams, our means online? Like, what are some of the learnings from that? How you get more connected, even though it's these distanced.
So Meetup historically was only in-person meetings. And there's still I'm in France right now, and there's a walk, or a meetup walk, organized in rural France that's a mile from my house next Sunday. So it's just a way of organizing people in person, but then we also have 10,000 online meetups a week right now. So it's just a way of connecting people across the board and providing the underlying marketing and technology to do that.
But people are finding the online experiences as satisfying as the socially distanced walk in Provence.
We all would like to have it in person. There are some things that are very specific. So, if all of us have a child with a very rare disease, it'd be great to be in person, but frankly, I'm happy to talk to the 25, mothers out there that have the same situation. And it's hard for me to find them. And so Meetup allows you to find those people. And in that case, there's going to be no one in my particular area that has this. So I need to do online.
That's interesting. So we have a number of strong female Endeavor entrepreneurs. I think you were just with Mona Ataya of Mum's World in Riyadh with me. And obviously, as we know, it's harder for female founders to raise venture funding, just as a data point. And yet you mentioned Zola, obviously Guild, Care.com. You've invested in a number of female CEOs. So talk about that and what strategies they might have for attracting venture financing where it's previously been difficult.
I mean, that's a tricky question because while it's true that women have raised less money, it's much harder if I said to you, how many of the people who were women went out to try to raise money but couldn't raise money that had equivalent ideas. That's an impossible study to do. There are fewer women who try to raise money, and then there are fewer people who get it. So I do think there have been some residual biases. I think every VC firm I talk to now is desperately trying to invest in more female entrepreneurs. So I don't know if today that bias is as great. I remember looking at DoubleClick in technology business, it's always harder to attract more women. And so we had 24% women. And so everyone was like, well, our interview process must be distorted. And then we went back and looked at the data and realized that we had no idea, but exactly 24% of all of our applicants were women. So maybe that there was some bias occurring before that, but it wasn't occurring the moment they came in and interviewed. So we just need to figure out where that problem is. And I think it's multiple. It's that fewer women have computer science degrees. And so, not all people have technical degrees, but it's, our industry is disproportionately technical. So that's a bias. And then there's a risk-oriented thing that somehow they haven't seen role models. But it's getting better. Look, it's so much better than it was 10 years ago. It's on the right path. We're seeing examples everywhere. So I actually never have, in a way, made a special effort. I think I just look at it objectively and have ended up with a disproportionate number of women in companies I've invested in. ClassTag has a female CEO we just invested in. The new healthcare company I just started, I just hired a CEO who's a woman. But, it wasn't I made such an effort. It's just I saw great candidates out there.
So we have a number more questions, but I just wanted to say for anyone who's joined, you can use the chat function to ask questions, and then Marina from our team is bringing them up to my Google Doc. So we want to hear from all of you. These are all questions, by the way, that have come in from Endeavor entrepreneurs over the last few days. Adrian, I did just get a WhatsApp from Adrian, our president, who reminded me that back to your you should only hire people without meeting them, that our head of sales, Santi Muro, Adrian met, and Adrian did all his references. I didn't meet. I just started hearing from our team and from other people and his previous employer how good he was, and he's been phenomenal. So Adrian just wanted to point out that we've taken your advice, and so far it's worked with our one case.
I want to throw one more thing. One example I just thought of that I do find, it's hard to generalize, but women, when they're raising money, if I had to generalize, are less aggressive and they're just less bullshitty. So, I had this conversation with Shan, who runs Zola, who's an amazing CEO. And she was out pitching in the very beginning and someone said, do you think you're going to make this year's budget? And she gave, and I corrected her afterwards, she gave an incredibly honest answer, which is like, it's a stretch budget. It's hard to know. I don't know. We're going to try and do the best we can. I think we might get there. Whereas to stereotype, a guy would have been like, oh my God, I didn't want to say it, but that number is so conservative. My guess is we're going to come in at 50% above it, but I like to, over deliver. And so I put a number like that. And, VCs respond to that, and it's kind of bullshit, but they do respond to it. They want to see confidence, and sometimes confidence and bullshitty are kind of the same. And I think women can do more of that.
Well, it's also the perfectionistic streak. We've seen that, women want to have the perfect PowerPoint and the perfect plan before they go in, or they don't feel like they're deserving of it. The men are like walking in there with 2 PowerPoints talking about how they're going to become the next billion-dollar company. And and so that's very interesting.
I'm heading up the search for Mercy Corps, which is a very large nonprofit with 5,500 employees. And so we're doing a search for a CEO. And the committee, I'm bringing everyone through anti-bias training. So it's coming up in 2 weeks, where we're going to go through a lot of things and say, did you misinterpret this? Should you have considered this? Do you have subtle biases in your mind? And so I think it's a process that everyone should go through over time, because we all have subtle biases.
What's interesting though? This is just a small sample size, but we've noticed on these virtual ISPs, interestingly, the more thoughtful, reserved founders are coming across better than the kind of charismatic, loud founders who seem kind of to flick your yellow light, radar. And I don't know if that's going to change this, because in person, those people might have come across as so confident, as you said, and so exciting. And on this medium, it's just been interesting to watch the more introverted founders doing super well. Yeah,
good. That's good. I think people do misinterpret ability to pitch to being a good CEO. And it's really not the same skill. But I've watched VCs in the past just walk out of a 30-minute meeting and think, I don't really know, I didn't really like the person that much, and that's not really how you evaluate something.
Okay, so it's hard to generalize, number one. Number two, you have founded and invest in companies across so many different verticals. But are there some through lines in terms of what makes good leaders that you think everyone can learn, or is it really sector specific or company specific?
Yeah, or person specific. I mean, there are very successful founders, Mark Zuckerberg, who's, introverted and product oriented, and there are very successful founders who are extroverted and sales oriented. At the end of the day, they have to be able to attract good people who want to work for them, who trust them, and want to be part of that team. And so that's an intangible. And, we've all seen it. If I name people who you worked with in a previous company, couple of them, you'd be like, I would never work for that person. And someone else, you'd be like, I could work for that person. And it's hard to have a set pattern. But one of the most important things I look for when we are about to invest in a company is I want to know, in a competitive labor market, will this person be able to attract great people? And we'll call coworkers, and that's what we want to know. Would you consider quitting your job to go join this person? And we want to hear yeses, because otherwise, we're not in a market like it was 20 years ago on Wall Street, where you would go work for some asshole just because it would help your career. Not in high tech, there are too many choices. You're not going to do that. You'll work for someone who's nice and will help your career.
I couldn't agree more. So you also spent a lot of time in the political realm, and I'm sure we were talking before about speaking with a biochemist friend, but talk about what you sort of see as potentially the new normal. How should CEOs be thinking about the time? Are we going to go back to work? You talked about the fact that a vaccine seems very far off. How would you sort of recommend people, apart from preserving the cash flow that we talked about, think about the next 6 months, year, 2 years?
Look, I think one, they have to be cautious, because we really have no idea. If we go back into lockdown in whatever country you're in, which is entirely possible in October or in August, that's going to change the dynamic a little bit. If the stock market crashes, it's going to change the dynamic of financing. So one is, unfortunately, you have to be very cautious. Don't run out of money. Secondly is, work on maintaining your team and have everyone keep focusing on the product. At the end of the day, that's what we do. And so it's not we don't win because we have better finance or accounting, we win because we have a better product than our competitors. And this is a time to double down on that, and a time to, especially if you're engineers, there's no reason why people are not more efficient today than they were before working from home. But you're going to have to spend as CEO a lot of time, because you can't walk in the hallways, but you've got to reach out. I mean, I spend a lot of time every day with multiple CEOs, multiple people work for me. You got to touch all these people virtually to maintain morale and maintain esprit de corps, and that's not easy. Yeah. So other than that, there's nothing else that you want to. I mean, politically, we don't know how it's going to play out. I'd assume cautiousness on getting back in the office, and I have multiple companies now that are giving up their office.
Meetup,
Meetup has 90 employees, and as of 10 days from now, we will not have an office. And we'll revisit that in September, October, see how we're feeling, see how productivity is. I actually think that a lot of my companies, what I'll recommend is that they go to 2 days a week in the office. If we knew that we all had to be there Monday and Thursday, then we can have our meetings in person, interview people if we feel like it, do whatever we need to do, see clients. And then the other 3 days, not be there and cut our rent bill in half. That's a pretty substantial savings.
You mean do flexible workspaces?
Yeah.
Yeah, I think people are also going to think about how do you do fewer people at a time, to at least initially, so people feel comfortable, right? With the social distancing, it's going to be hard to crowd people into small conference rooms.
So many people do think that. I don't think that. I do think that in the very short term they will. But if you were going to be taking the subway into our office, which you are, then the office is not the dangerous part of your day. So maybe we'll be a little bit more sensitive in conference rooms and things, but if you have 150 square feet and you just came in from a subway where you had literally 2 square feet with a bunch of random people, this is not the dangerous part of your day. So
people are talking about maybe getting subway, assigned subway times. I mean, the world may be completely different. So you mentioned, we got a note in from a mentor in South Africa, just talking about digging in further in terms of the balance between maintaining, the bottom line and the cash and what you need to do to preserve the company, and the kind of empathy, the employees who are needing more kind of emotional empathy and management there. How do you achieve both?
Well, we have to talk about the specific trade-offs, but you are going to have to let people go. Most of my companies have also done salary reductions, and I think that is fair right now, certainly for the senior people. All of us who are at home are frankly spending a lot less money than we used to. So having 20% salary cuts is the market right now, and so we should adapt to that. So I think that's the right thing to do for a couple months. If it changes, we can change that. And these are relatively tough times, and everyone needs to get through it. And so you don't want to be sitting here in December and realize, oh shit, we had people who were working less or weren't getting as much done for 7 months, paid them full salaries, and now we're bankrupt. And so those are, look, when I went from 2,000 people to 1,000 people, it involved a lot of very difficult decisions, both people who you knew needed a job and who trusted us, and were very good at what they did, and we still let them go. But many of my competitors went bankrupt, and DoubleClick is here 23 years later because we made it through that crisis.
I also wonder if this next generation is going to just approach work differently. I mean, fairly or unfairly, the millennials had a rap on, what are you doing for me lately? What are the perks? If my perks and my growth aren't good enough, I'm out of here in 18 months. The competitor, step it up. And now, as Adrian and I've been saying, the job is the perk. And I think your children and mine, going into the workforce, are happy to have a job. And so I think that mine are a little younger than yours, but it's just going to be interesting to see if that dynamic changes.
Oh yeah, no, we're going to watch supply and demand, regulate a little bit. And for example, in every one of my companies, probably, 15 of them have done 20% pay cuts. Not a single person has left. which had we done that 6 months ago, there would have been an uproar and people would have said, why don't I have free smoothies and all these other things? And people are like, I get it. I understand why you're doing it. And by the way, one of the reasons we're doing it, if we don't do that, we'll probably have to let more of your coworkers go. Because number one responsibility is we have to save this company and we need to make sure we have enough cash. And so, got to do it.
Right. Someone was demanding, a raise, not anyone who's here. And Adrian said to them, okay, who do you want me to fire?
Yeah. Yeah.
Right. Who on the team? You tell me. Who?
Exactly.
Asla from Turkey, who you know, wants to know, you founded and so many companies on such a diverse spectrum in terms of verticals, which is unusual. Like, how is there a common theme that's defined them, or how do you identify that opportunity that you just know is likely to work?
Yeah, so there's definitely no theme, because even just Mongo, Business Insider, Gilt, and DoubleClick could not be more different. And Nomad Health is completely different. So so I always think of problems.
So you're not allowed to give entrepreneurs the tough love about focusing, because
well, if they're going to be CEOs, they have to focus and do one. I fundamentally don't believe that you need to start a company in a narrow vertical that you know well. That actually, I think if we looked at a pattern of many of the largest companies that have been founded and successfully, they are people who worked at other startups in a different vertical. So did the Airbnb people come from the hotel industry? Did the Uber people come from the taxi industry? By and large, the answer is always no. Because, and even when I was raising money for Business Insider, neither Henry Blodgett, the CEO, or I had a media background. But we could see something that most media people are like, oh, you can't do that. That's just not how it's done here. And we're like, I don't see why. And so doesn't mean it's always going to work, but I think innovative ideas come from slightly outside. So I'm always thinking of problems. Like Zola, was a problem that the wedding registries out there were terrible and didn't offer. I could not give you, yoga classes if you were getting married on a Bloomingdale's registry. They only gave me the products that they sold, not the products I wanted. It's a pretty simple idea, and we have a business that's doing hundreds of millions of dollars because of that. We knew at Mongo that the product that Oracle was offering was expensive. They weren't great to us, and it wasn't the right technology infrastructure. And so we created a better product. So there are problems out there all the time that you know about. I mean, I started a company last year that's very small that no one knows about yet that is going to help you manage your weekend home. And so if you have a house in the Hamptons, you're managing multiple vendors. No one feels like they're doing it great. If I asked you, the guy who mows your lawn, does he make more or less than all the other guys in the neighborhood? And you're probably like, I have no idea, actually. That doesn't make any sense. And so we'll help you with technology and people on the ground.
Is that the best timed? Sorry, but is that the best time company? When people are not exactly worried about their second homes.
So, and that's a great question. And here's why the answer is it doesn't matter at all. That this company this summer will have 20 clients. And because it's the first summer and we need to test the product. The product's not even out yet. The product will be out in a month. And so it's the perfect time. No one else will raise money to do this. Your instinct is that you shouldn't do this right now. A year from now, 3 years from now, 5 years from now, we will be back. I mean, the lesson from the financial crisis, by the way, there were hundreds of articles in the beginning of 2009 saying, you know what, no one's going to buy Louis Vuitton bags anymore. It's all over with. And actually, nothing changed. It took a couple of years. Once people had money, they went back and bought Louis Vuitton bags and traveled and did whatever they wanted to do. Fundamentally, you and I can't point to major shifts that occurred because of that. And actually, the lesson was you should have bought Louis Vuitton stock that day in a counterintuitive way because it was going to come back. And the conventional wisdom is buy Zoom stock today, which is highly valued, and don't buy Meetup.
Cruise lines.
Cruise lines or Meetup, because it's all about people getting together in person. And so I think we find that people tend to just move in these waves of conventional wisdom. And I want to think all the time about what is going to be happening 4 years from now. And did what happened in the last 2 months impact that? And sometimes the answer is yes, and sometimes the answer is no.
I love that. We've talked a lot about the business side. You know, we talk a lot about it in Endeavor about paying it forward. And one thing that's remarkable about you, Kevin, is you are involved in so many nonprofits and community and political work as well. So I'd love to give you the opportunity to talk about your philosophy on giving back and paying it forward, and how you managed to find the time, even while, you know, founding, supporting, running these high growth businesses.
Yeah. And I've tried to, over the last really 25 years, I have, a couple different interests. So one of them is certainly on a global basis. And so I've been involved with boards of Human Rights Watch for a long time, and Doctors Without Borders, and now Mercy Corps. And so that's something that I love doing, and Endeavor, I think, is part of that. It brings me to other parts of the world. Our trip to Saudi Arabia, was fascinating, just to see Saudi Arabia as well as to meet everyone we met there.
And we went to Beirut together too, and had a wonderful wine tour, right?
Yes, exactly. So we were in Beirut together, and then with Mercy Corps, I went to visit Gaza, which is a fascinating place, and Uganda, and a whole bunch of different places that are quite tricky. And so that I love intellectually that part, and there's huge problems, and most people don't spend enough time on it. And then I spent a fair amount of time on New York from a tech point of view. I'm on the committee to reopen New York that the governor has put together. We had a call a couple of days ago. I've been on a bunch of MTA commissions. And so trying to play a small role in helping our community locally. And then the third area I've spent a fair amount of time on is education. So I was on the board of Yale for many, many years, and on the board of INSEAD. And then my wife is at University of the People, which is a nonprofit university for underprivileged people. And so that's an area of interest as well on the education space. And I'd like to do more things in that area as well.
And how do you juggle the different worlds and find time, because you're also an incredible dad. Your kids are now they're with you, but they boomeranged back because of COVID. They were graduating. Empty nest has been refilled, but you're a very present dad. You're a wonderful friend and host dinners. Like, how do you not sleep? Like, what are your time management secrets?
So I'm a very good sleeper, and I do recommend the book. I do recommend the book Why We Sleep. I don't know if you've read that yet, but I think almost everyone should read at least the summary. Matt Walker wrote it, because sleep is actually very important. So I try not to skimp on that. You have to manage your time, and that's a challenge for all of us. I try and make sure that I don't spend time doing things I don't want to do. So even when we had less money, I always had more help around the house. We didn't have nice cars. We didn't have nice this. We didn't fly business class, but I had help around the house because my time is valuable. And so I actually don't want to spend 2 hours fixing something. Plus I'm terrible at it. I want to be reading, writing, being with my kids, and doing these other things. And so look, you also have to, I also sequence them. So in the boards I talked about, I'm only on one international board at a time. So I'm actually never on that many international boards. Only one at a time, only one university at a time. And so I can manage it and make sure that I'm not overpromising what I'm going to deliver on too.
Great. Well, why don't you shift to what the bigger picture, sort of what is concerning you about the state of the world we're in, and then shift to what's bringing you hope and what's exciting you now. Why don't you talk about the two sides?
Yeah. So first of all, overall, I'm pretty concerned right now about, the economic impact of the coronavirus is going to be much greater than the health impact. And I think it's going to go horribly, horribly wrong. We're going to have 25, 30% unemployment, and, hundreds of thousands of bankruptcies, entire sectors, restaurants, things like that wiped out. It's going to be devastating. And so we're going to pay a price for that for a long time, longer than I think people think. I'm very worried about that. I'm also very worried about the second order implications, which is that, I am highly certain the Western world, will abandon the, Africa, the Middle East, areas like that. There's no way you can run for office this fall, whether you're Republican or Democrat, and say, we need to help, either entrepreneurs or starving people in Pakistan, when there are 1 million people out of work in New York City already. And we're going to have food kitchens that cannot keep up. We're going to have people starving in the United States. And so it's just going to be a hard sell. And so I think we're going to have retreat there. So I'm very worried about that. You know, in the US, then we're country by country. I mean, US, I'm very worried about us just dealing with the income inequality problem. And I'm not seeing any momentum on that issue at all. You know, we cannot have, I mean, obviously I'm on the left, so that will become very apparent. But we cannot have a country where the wealthiest 20% pay less in tax than the bottom 20%, which is what we have today, you know, which is absurd. And then at the same time say, oh, but we can't pay for healthcare, or we can't pay for schools, or we can't pay for bridges and all the things that people know that we don't have in the United States. I mean, it's outrageous. So I'm not very optimistic there. So I'm worried on a global scale. There's no global leadership. You know, the US is absent. China has its own self-interest. Europe, you know, is a complicated decision-making structure. So there's no there there.
And that's honestly where trust-based networks like Endeavor, I believe, matter more than ever.
Yeah.
I mean this seriously. I think that you need a tribe that is global when that's in retreat, and you need people you can trust. I think cross-border, you know, alliances are more important than ever, and they're not going to likely come from the political sphere, to your point.
Yeah. So, you know, in the U.S. has always had a great private sector, and Endeavor is a kind of example of that as a nonprofit. And so we do that very well, which is great. And so it's only the areas where, you know, cannot be done that way, like defense or global pandemic management, you know, which is hard to outsource if you know, gut the CDC and don't do research and things like that. So that's where we have a problem. You know, if you don't build bridges, it's hard to get private companies to do that when there's billions of dollars. So I'm worried about those things. On the other hand, you know, look, the globe is, the humans are incredibly entrepreneurial. And so they are going to figure out answers to most of these things over time. And so I am a big believer, if I take a longer term perspective, the sort of Steven Pinker book perspective of the world has gotten much better in the last 25 years. I mean, you were in Latin America 25 years ago, and it's hard to imagine when I graduated from college, there were basically no functioning democracies other than Chile. And today, okay, it's not perfect, but it's so much better, so much better. And that's true in many parts of the world. You know, in the 90s, there were 4 million people who died in the Congo. 4 million, you know, 6 times as many that died in Syria. No one even focused on it. No one cared about it. There weren't a lot of headlines. No one even, you know, we're in a better place now in dealing with those international issues.
So before we go to a big picture close, we do have 2 sector specific questions I just want to throw out. One is from Chile, actually, you mentioned, which is what long-term trends do you see in the travel sector? And then we have a Jordanian Amin who's asking you about how you see the education, higher ed post-corona. And we have a lot of colleges saying, we were talking about this earlier, they're not going to go back onto campus, and yet our people are going to pay online. Like so those 2, let's say travel and education as sector specific thoughts.
Yeah. Travel, I don't have any brilliant thoughts because it's obviously going to be an extraordinarily difficult thing for the next 2 years. People are going to retrench, travel less until they feel safe on a plane. And so that has not been solved yet. And we're 6 months, a year, 2 years, 3 years away from that. So I think travel is going to be a very, very difficult sector, you know, internationally. Almost, I would say in the last 50 people I've talked to, people like you, Linda, who travel a lot, almost every single one is saying they're going to travel less, you know, one way or another. And so that's a problem. And I don't have a solution for that yet. That's a series of hundreds of little solutions. You know, is the air circulation system in airplanes, does it get better? Do masks get better? Do treatment get better? But until we all feel safe, you know, no one's traveling. Education is a more interesting question because, and this is country by country, but certainly in the US, we have a fundamental problem. You know, our Ferraris, which is the Ivy League and the top 20 institutions, are the best in the world, and they're incredible. And they'll always be fine. And then the rest are overpriced. We have a student loan problem, which does not exist in other countries. So other countries need to improve their structural research and development. And the United States needs to have more cost-efficient training. And I've actually been thinking about that. I wanted to start a university, which is a relatively big idea, but I haven't done it yet. I'll tell you about this idea later. But, I think we're going to try and, right now, your only choices at 18 in the United States are go get a bad blue collar job because you don't have a college degree, or do 4 years in college. And there's not much in the middle. And that just doesn't make any sense.
And come out with big debts.
Yeah, and that just doesn't make much sense. It would be as if we said, look, you can have like a moped or a Lamborghini, but there's just nothing in the middle. And so someone's like, yeah, what about a $25,000 Honda? That's a good idea. And so we have not created that successfully in the United States. And it should be a 2-year degree. It should be deeply technical. No one's designed it for cost structure. No one, how many of you have a company on this call where you close down 4 months a year and send everyone off? You're like, no, because that wouldn't work. Well, that's what every one of our universities do. I mean, I have a son at Yale. They go to school 36 weeks a year. Using your assets, it's just not effective. You wouldn't have tenure. We will not allow in any Ivy League university to let a senior person at Google teach a computer science course unless they have a PhD. We will let someone, and we do actually at Yale, who got his PhD in 1988 doing Fortran, and he can teach computer science. So does that make sense? I don't think it makes sense. And so things like that have to change. I mean, we at Yale we were dinged on our ratings because we have the best MFA program in the world, which is arts management. And yet because the people who teach that, like Meryl Streep, don't have a PhD. And so we don't have 100% PhDs teaching. So it's just crazy stuff like that doesn't make sense. And so education does need to get better. I think there's big opportunities, but it's so hard because it's hard to change things.
Well, we're coming to the end, which is so unfortunate because, Kevin, what I love about talking with you is you know so much about so many different things. And like these conversations, I always feel could go on for hours and hours. I look forward to our next in-person one, but this has been such a pleasure. I want to give you an opportunity for final parting words to all the entrepreneurs listening.
Yeah, so my parting words are that my involvement with Endeavor over 12 years has just been fantastic. And I get energized every time because the number of energetic, fantastic, driven entrepreneurs all over the world is growing so much. And the quality of people that we're seeing, that I see at the ISPs now is so much better than a decade ago. And it's a reflection partially on Endeavor and partially on the fact that the mission that Endeavor has been a part of, which is encouraging entrepreneurship all over, is working. And it can get much bigger. I am a little worried that in a pullback, the money will dry up even more so in second and third world countries than it will in first world countries. But still, the fundamental trend is there and it's working. And entrepreneurship is one where you get an example, people leave your company, start a bunch of other companies, and that is happening. That is happening all over the world, and Endeavor plays a big role. And Linda, you've played a big role. And so I'm always proud to be a part of it.
Well, thank you. I love you. Even when you give me the tough love, I always love you. No, and you're an investor in Endeavor Catalyst. We are closing Fund 3. We will have doubled the amount. We're going to raise $120 million, half of which will have been raised this calendar year, which is amazing. And the number of co-investments, we're seeing great co-investments, is only growing. It's not, at least yet, not good, it's not stopping or slowing down. And the quality of candidates, I hope you'll do one of our virtual ISPs because it's been extraordinary. So we are, like you, seeing so many places around the world with the talent that was always there, but really having their moment. So we will be there as Endeavor, even if some investors pull back. You are there, Kevin. You're now an Endeavor ambassador. So thank you for pioneering this program with us. We love you so much, and I look forward to seeing you in person soon.
Same here. Thanks so much. Bye.